Hey, it's Darius. And why is everybody buying I-75 CPA Review? Is it because it's half the price of all the other CPA review courses? Is that why everybody's buying it? Well, the savings is definitely one reason, but here's 112 more reasons. Look at all these folks who've gotten on I-75 and taken it to their next pass, and then came back and left me reviews and recommendations. And this is what I call the I-75 Hall of Fame. This is quite a diverse group who all started out pretty much with Becker or Wiley or Gleim or Roger. They must have gotten a little jammed up on their road to CPA exam stardom. So they hit me up and they said, "Hey Darius, can you do for me what you've done for so many others?" And I said, "Sure. Let's get you on the right road." So I put them on I-75. They passed, and they came back and gave me these great reviews and recommendations. And you can reach out to any of these folks, and they'll tell you all about the I-75 course. Here's a simulation on income and deductions for both employees, and some of the questions are going to relate to the self-employed, and it'll be very clear on the exam whether your client is employee or self-employed. Some of the questions are going to be about income, some are going to be about deductions, and it's very important to note that certain deductions for employees are no longer allowed. But if that individual were self-employed, they would be able to take that deduction. And because some of this is new, recently changed as a result of the Tax Cuts and Jobs Act, it's now being tested more heavily than maybe when the rule first changed back in 2018. It's now going to be tested more regularly. You're expected to know it now that certain deductions for the employee are no longer allowed, but if a self-employed person were to spend that money, they could deduct that on their Schedule C. So some of these questions are going to be about that. But we're going to start out going over employee reimbursement under what's called an accountable plan versus employees being reimbursed where there's no accountable plan, and also what happens when the employee is not reimbursed but spends money while on the course of their job expecting to be reimbursed but then never gets reimbursed. So we're going to put a lot of closely related topics together in this sim. They're all going to have to do somewhere with income and deductions for employee and the self-employed. So answer true or false for each of the following, starting with number 1. Grove is reimbursed by his employer $1,000 for business expenses under an accountable plan. The amount is not taxable to Grove for federal income tax purposes. True or false? The answer is true. If employee business expenses are reimbursed, and they're reimbursed under what's called an accountable plan, the reimbursement is not taxable to the employee for federal income tax purposes. So in this case, Grove spent $1,000 of his own money, got reimbursed by the employer under an accountable plan, is now made whole, and there's no impact on Grove's income tax return. Number 2, Grove is reimbursed by his employer $1,000 for business expenses under an accountable plan. The amount is not taxable to Grove for FICA and Medicare purposes. That is true. If employee business expenses are reimbursed under an accountable plan, the reimbursement is not taxable to the employee for FICA and Medicare purposes either. So we already said in number 1 that it wasn't taxable for federal income tax, the reimbursement. It's also not taxable for FICA and Medicare, which means there's no reason to include this $1,000 in Grove's W-2 as wages because no payroll tax will be paid on it. And like we said in number 1, if there's an accountable plan in place and Grove's reimbursed, the tax code looks at it like this. He spent his own money, and now he's been reimbursed, he's made whole, and there's no impact on his tax return, his W-2, no payroll taxes are paid on it. Number 3, Grove is not reimbursed $1,000 for business expenses by his employer that Grove paid out of pocket. So this time he's not getting paid back. Grove gets no deduction for the $1,000 expense. You might be surprised to know that that's true. If employee expenses are not reimbursed by the employer gets no deduction for that expenditure. So Grove paid the money, $1,000 out of pocket, probably expected to be reimbursed. The reimbursement never came. He gets no deduction for spending that money. Now clearly Grove is an employee. He's not self-employed. He's an employee, and employee unreimbursed expenses are no longer tax deductible as a result of the Tax Cuts and Jobs Act. Used to be that there might have been a deduction allowable here on Schedule A itemized deductions, what used to be called miscellaneous itemized deductions in excess of 2% of AGI. But that was repealed under the Tax Cuts and Jobs Act in 2018. So you probably will be expected to know on the CPA exam this very fact here in number 3, that if employees pay out-of-pocket expenses and don't get reimbursed, they're out of luck. No deduction. Here we go with number 4. Grove is reimbursed $1,000 for business expenses by his employer, but not under an accountable plan. So Grove spent $1,000 out of his own money, got reimbursed by the employer, but there's no accountable plan in place. The reimbursement is taxable to the employee, but the employee can then deduct the $1,000 as an itemized deduction. True or false? This is false. If the expenses are reimbursed but not under an accountable plan, the reimbursement must be included in the employee's income for both FICA and income tax. So FICA and Medicare, and also income tax purposes. The reimbursement is considered income to Grove. Even though I know he spent his own money then, and now he's getting reimbursed, because it's not under an accountable plan, the reimbursement is considered income. And guess what? He gets no deduction for having spent the money. So it really is painful for the employee if there's no accountable plan. Businesses should have an accountable plan to reimburse employees so they can avoid having the employee pick up the reimbursement as taxable income. So it's going to look like payroll, this $1,000 on Grove's W-2 now, because the plan is not in place. There's no accountable plan. So remember back in number 1, we said all there had to be was an accountable plan, and there would be no income to Grove. Grove would have spent $1,000, and then they reimbursed him under an accountable plan, and there's no income, no deduction, but Grove is made whole. Here, there's no accountable plan. He spent $1,000, they reimburse him the $1,000, he's made whole, and then he finds out he has to pick up the $1,000 reimbursement as taxable income, as wages on his W-2, because there's no accountable plan. So the reason why number 4 is false is because there's no deduction here. It says the reimbursement is taxable. That's true, but the employee can then deduct the $1,000 as an itemized deduction? No. Number 5, for a plan to be considered accountable, the plan must be in writing and employees must substantiate all expenses to be reimbursed. That's true, and that sounds like it's accountable, right? The plan must be in writing and employees must account for all expenses that they want to be reimbursed for. They must substantiate them. Among the requirements of having an accountable plan is that the plan itself be in writing and be available for IRS inspection. Also, employees must substantiate all expenses to be reimbursed by providing receipts, documentation, explanation of the purpose of the charges, the date of the expenditure, if the employee was with clients, who those clients were. So for a plan to be considered accountable, the plan must be in writing and employees must substantiate all expenses to be reimbursed. And this is an explanation of substantiate here. The fact that you can explain the purpose of the charges, the date of the expenditure, who you were with, if you were with clients, were they potential clients, were they actual clients? So the answer to 5 is true. Number 6, for a plan to be considered accountable, employees must return any excess reimbursements within 30 days. What do you think the answer is? True or false? And if you think it's false, leave me what you think the answer is in a comment on this YouTube video. This sim actually goes all the way to number 22. So if you want to see the rest of these 16 items, go to cpaexamtutoring.com and get yourself on I-75. You can click on one part and then REG, and that'll take you to the host, which is BrainCert. BrainCert hosts the I-75 platform, and you can choose either a monthly subscription or you can get the full reg course just one time for $299. So take advantage of the specials that are going on right now and save before prices go back up. So where do you go for the I-75? You go to cpaexamtutoring.com.